Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 23rd of January and our guest today is Jeffrey Halley, independent market analyst. Jeff, thanks for coming on the show.
A pleasure.
Now, Jeff, for a start, we want to look at, there's a lot of buzz around the dollar-yen trade. Give us a perspective of what investors are really looking at right now.
Well, the general consensus is that Bank of Japan is going to continue its negative interest rate policy. The pressure on the Bank of Japan has eased now that this Fed easing trade is in full swing in international markets. But what we are still seeing is US dollar yen continuing to rise towards 150. We're at about 148.25 this morning, not too far away from that level. And traders are starting to wonder whether the Bank of Japan or the Ministry of Finance, who are the ones who actually do the intervention, the Bank of Japan executes it, whether the MOF in Japan will be looking at intervening in dollar yen again. When dollar yen hits 150, as it has over a few times over the past year, we start seeing the usual comments, watching markets closely, that sort of theme. And then when it gets towards 152, that's when we tend to see the big bazooka taken off the wall and we see intervention. Will this happen this time? Because we are seemingly every day creeping higher and higher and higher towards that 150. Definitely something for Forex markets to keep an eye on this week.
Now, on the other side of the equation, we have rattling coming out of the US. So we've had this policy on the table, but it's come back up again. Donald Trump has proposed a 10% tax on all imports into the US. Now, in the light of this proposal, especially this being an election year, should governments and businesses start doing scenario planning on the potential impact of a Trump presidency?
Yeah, absolutely, but it's not actually Mr. Trump who's come out in the news wires and said that. This is a policy that is being circulated around by others in his greater sort of orbit, suggesting that this is the policy he is going to be looking to enact. Either way you cut it, it's going to have global ramifications. If Mr. Trump wins the presidency in November and then decides to impose a 10% tariff on all imported goods into the United States, whatever your personal political persuasion is, I do believe that financial markets, but also enterprises, companies around the world are going to have to start, as you said, scenario planning the ramifications of a Trump presidency win, if only as part of risk management and planning. Whether this impacts the United States or not is really not within this context, but certainly if a Trump presidency is looking at bringing in tariffs on all imported goods into the United States, this is definitely going to impact Asia, for example, and certainly Asian companies should be scenario planning for these cases. And I think they're going to have to keep doing that as we see the election cycle progress through 2024.
So one of the key things also is this. This actually touches on a lot of broader issues as well. The US has a lot of free trade agreements with countries around the world. If we look at example very close to home, Singapore is a big trading partner of the US, and it has various trade agreements. You've got CPTPP agreements as well. That's all going to basically go out the window in a Trump presidency. That's how frightening this is.
Yeah, when you start putting all the pieces together, you're looking at a sea change about the United States' role in the world economy on a number of geopolitical levels, something that, and its role effectively since the end of World War II. What role will the United States play in the world under a new Trump presidency? Are these agreements worth the paper they're written on under a Trump administration? Will he just look to walk away from a lot of these and throw them on the bonfire? We don't know yet, but this is something that both governments and commercial entities, particularly in Asia, but also around the world, need to start scenario planning, because it will have long-lasting ramifications.
Now, Jeff, on a final note, then, with the middle of the second day of the week, really, what are some of the key data points for the rest of the week that we should be watching out for?
Yeah, it's nice to come back to earth, so to speak. Look, we have PPIs out of the Eurozone and the US tomorrow. Thursday sees an ECB rate decision. At this stage, it looks unlikely they are going to move rates either up or down. But I think the key data here will be on Friday. This is the US personal consumption and expenditure data. This is a favorite metric of the Federal Reserve. Now, we all know that this Fed easing trade sooner rather than later, buy everything, has been in full swing over the last couple of months. Markets are being far, far more optimistic about the timing of Fed rate cuts than the Federal Reserve itself is signaling. This number on Friday, I think, will give us a much clearer picture of who's on the right side of that equation. If it's soft data, then we could potentially see an acceleration of that Fed easing trade. Conversely, if that data comes in extremely strong, and we have seen pretty strong consumer data actually over the last week already, so I think there is a danger that data could come in stronger. That may force some of that exuberance out of the market in the short term.
Now, Jeff, thanks for coming on the show, and thanks for your insights.
A pleasure.
Now, we've been speaking to Jeffrey Halley, independent market analyst. This has been BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.